Hi, my name is Danny Brown and I'm the CEO of Myriad Real Estate Group, and this is our July market update. So right now in Phoenix, it's more of the same. So inventory continues to be suppressed. So right now there's about 8,100 homes available for sale between single family homes, townhomes, and condos. Demand is also suppressed, but it is still outpacing supply. So it's not very complicated in terms of housing prices and what the housing market's going to do. I keep saying it's all just based on supply and demand. So as supply remains low, as long as demand continues to outpace that supply, you are going to see home values continue to increase, and we are seeing that. So even though overall volume is down, there's not a ton of people buying homes, there's still not enough homes to meet that demand. So home values have been slowly increasing this year instead of decreasing. So believe it or not, June marks 1 year since the housing market across the country went into a recession. And a recession is a decrease in activity or sales, decrease in employment. So you have a lot of lenders, realtors, title people getting out of the industry, and a decrease in overall income, right? That's what dictates a recession. So housing has been in that now officially for a year. We've also had high mortgage rates in the 6 to 7% range for a year as well. So buyers are becoming more and more used to the environment that we're in right now. Human beings are very adaptable to the environment around them, and we're kind of settling into this new normal of rates being somewhere between 6 and 7%. So there's still activity taking place, and the buyers that are in the market are just adjusting their expectations and settling into a higher rate environment. So with that being said, mortgage rates right now are hovering in the mid to high sixes, and that trend is going to continue. So as inflation goes, interest rates are going to go. I, for one, believe that inflation is going to start to come down because the majority of the inflation number that the Fed looks at is based on housing. But what a lot of people, even economists, get wrong is it's not based on what homes are selling for, it's based on what homes are renting for. And so if you think about it, a lot of people sign a lease and that lasts for a year. So that inflation is what's called sticky. So it is very hard for that to change because people are signing those year-long leases, and it's not something that is coming up every single month, right? So once these new leases are coming up, there's a lot of apartments, multifamily, and just rental homes coming on the market. We're actually going to see rental prices flatten out and start to come down, especially in multifamily, apartments, condos, those types of things. Single family homes, I think, are still going to remain a little bit elevated, but for the most part, rent will start to decrease, and we will start to see that downward trend in inflation, which should hopefully bring down mortgage rates as well. There was an article recently that was put out by Forbes. They were interviewing Barbara Corcoran from Shark Tank, and she basically was stating that she doesn't see or find it hard to believe that if mortgage rates get into the fives, that we could see property values across the country spike another 20%. My argument for buyers is if you can afford the monthly payment now based on interest rates where they're at, you should absolutely capitalize on the market. So like I mentioned, demand is depressed. Supply is also depressed. If mortgage rates fall, you are going to see an increase in demand, but you may not see an increase in supply. That's why Barbara is expecting home values where they could increase another 20% is just based on that supply and demand. So if you can afford to purchase a home right now, we are getting buyers closing cost assistance to buy down their rate. We're getting them credits in lieu of repairs or just repairs in general. It's a much friendlier, less aggressive market for a buyer to be in. Once you secure that home, it's going to be much easier for you to refinance in the future than it is to compete with all the other buyers that are now entering the market for that limited supply. So I much rather already have my home and refinance when mortgage rates drop than try to compete with everybody for homes when there's not a ton available for sale anyway. That's where those prices are going to start to get pushed back up. So sellers, right now, it's a tale of two markets. The argument I've been making is that if you've got a great home that looks good, is priced accurately, you are going to receive multiple offers on the home and probably relatively quickly, less than 30 days. Homes that are not as attractive, that need work, that maybe are priced a little bit on the high side, they're going to sit. They are going to get activity, but buyers are very selective right now. They've got higher interest rates, they're paying higher prices, and so they're going to be a bit choosy. They're not going to buy your trash, right? So you need your home to look good in order to get the price that you want, or you just need to price it accurately the first time. If you end up pricing too high, you're probably more than likely going to end up selling for less than what you would have sold for had you priced it right the first time. And again, that just comes down to buyers are paying higher prices, higher interest rates, and they want to check as many of the boxes as they can, and they're not going to overpay for something that doesn't look good. Here in Phoenix, the seasonality really starts to kick in. So July, August, things tend to slow down. So our population tends to decrease. Kids are out of school. It's really hot outside, so a lot of people leave Phoenix and go on vacation, and they're not quite thinking as much about housing. So this could be an opportunity for buyers, less competition. And our summer months, transactions still happen, homes still sell. It's just not at that high, rapid pace. Then when we get into the fall, once kids start going back to school, our weather starts to cool off. We do see an uptick in the fall. So September, October, first half of November, that's a really good time for real estate for sellers. Then we get into the holidays and it's really quiet, right? Most people are focused on the holidays and getting their home ready and Thanksgiving and Christmas and all of the stuff that happens during that time. So that is probably the worst time to be a seller, best time to be a buyer, because there's just not a ton happening. So that's when you get your best deals. So that seasonality is definitely in effect right now for Phoenix. So we are seeing a little bit of that summertime slowdown. Thank you so much for watching. Again, my name's Danny Brown with Myriad Real Estate Group. Make sure to leave a like and subscribe. If you have any questions, leave them in the comments, and we will see you next time.